Hey everyone, Couch Investor back to another earnings video for today. So another EV company reported earnings, and that's Nio. The stock is actually up at the time of making this video. Of course, things might change when the market opens. CPI report might change it all. Now, Nio is a Chinese company, so of course there's always that risk involved with the COVID lockdowns, etc. But this quarter was much better than the last one. That's probably one of the reasons why the stock is green. We're also going to talk a bit about RIVN at the end of the video. Most of you that follow this channel know that I'm a big RIVN fan. I do not own any shares. I only own shares of Tesla when it comes to an EV play. Now, as for Nio, of course, the majority of their business is in China. They've got some aspirations to go into Europe and maybe one day into the United States as well. Will grow into Europe, I would say. Let's see what happens, because the current macroeconomic environment is not really, well, it's not making it easier for them to expand. Now, before we jump into this earnings report, I would really appreciate it if you can hit that thumbs up button, subscribe if you have not, and if you want to support me on this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So, first things first, here is those numbers here, the key operating results for deliveries. So it's nice that they give us a little history, let's say. So why did I mention before this quarter is better than last quarters? Well, it's because if you look at Q4 to Q2, barely any growth there in deliveries. But now when we go to Q3, a nice little jump here, 31,607. So that was well received. Now, if we scroll down a bit and making sure that my face is not blocking any important details. So vehicle sales were $1.67 billion in the third quarter. That's an increase of 38.2% from last year and an increase from 24.7% last quarter. So reacceleration of growth. Of course, we've seen that with Tesla as well because of all the issues there in China. But when it comes to vehicle margin, that's a different story than Tesla. That's 16.4% this quarter compared to 18% last year and 16.7% last quarter. Now it comes to revenue, that came in at $1.82 billion, representing an increase of 32.6% year over year and 26.3% quarter over quarter. Now I'll skip this for now because we're going to have a look at that in just a bit. But net loss. So I put it in red because, well, it's an issue. So net loss was $577.9 million in this quarter, increased 392.1% year over year and 49.1% quarter over quarter. Now, if you exclude the share-based compensation expense, adjusted net loss was $491.9 million, representing still a huge increase, 514.2% year over year, and an increase of 54% quarter over quarter. Now, all that said, they do have $7.2 billion in cash and cash equivalents, so they still have a nice, decent cash pile. And now if you want to get a major overview, so there's a lot of red, there's a couple of yellows and a couple of greens. So the greens, we already talked about that. Now the red, that's for loss from operations, adjusted loss from operation, net loss, adjusted net loss. Then the same thing here. I didn't put it in red, but it's the same story there. Net loss attributable to ordinary shareholders, net loss per ordinary share because, well, it is an ADS, so a bit different. But all of that, well, the losses increased year over year. I'm going to explain to you why that happened. Now, as for gross profit, that grew 29.5% quarter over quarter. It is down, although 12.9% year over year. And as for gross margin, that's up 13 basis points quarter over quarter, but that's down 700 basis points year over year. And I remember when we talked about Tesla and them reducing the price of their vehicles, yes, it will hit margins, but since their margins are much higher than the competition, then they do have some flexibility there. As we've seen with Nio, if things don't get any better, well, it's 13% now. Maybe we're going to go down to single digits. Who knows? And now if we scroll down, so the cost of sales here, they say that the increase in cost of sales over the third quarter was mainly driven by the increase of delivery volume and higher battery cost per vehicle. The increase in cost of sales over the second quarter of 2022 was attributed to the higher delivery volume. Well, I mean, over time, higher delivery volume should really be a positive thing. Now continuing here on some explanations. So gross margin, the decrease of gross margin over the third quarter last year was mainly attributed to one, the decreased revenue from sales of automotive regulatory credits with high sales margin, the decrease of vehicle margin, and three, the reduction in sales margin resulting from the expanded investment in power and service network. The increase of gross margin quarter over quarter was mainly attributed to the sales of automotive regulatory credits with high sales margin. And then as for the vehicle margin here, they say, well, the decrease there was mainly attributed to the increased battery cost per unit. We know that battery cost is an issue, well, in the industry. Tesla was well prepared for that. Apparently Nio not that much, even though I'm sure other companies are having the same struggle. But this was partially offset by the decrease of subsidization in user vehicle financing arrangements. The vehicle margin remained stable compared with the second quarter of 2022. Let's see how they'll do the next quarter, which they already gave us some business outlook for that. So I'm going to scroll down and see those numbers right here. So they expect deliveries of vehicles to be between 43 and 48,000 vehicles. So a nice little jump again quarter over quarter. This represents an increase of approximately 71.8% to 91.7% year over year. Total revenue to come between 2.44 and $2.70 billion, representing an increase of approximately 75.4% to 94.2% year over year. So quite nice there. Of course, let's see if they can control the cost of sales there. So that was Nio, and of course, you know my thoughts on Nio. I rather not have it in my portfolio. I think there are many other opportunities out there. I rather go with an American company. I already have Tesla, of course, but I always said if I have to choose a second one, it will probably be Rivian. So RIVN also reported earnings, and I believe the stock is also up around 6-7% or so at the time of making this video. So these are the key highlights. So right now there are R1 net pre-orders in the United States and Canada as of November 7 sits at over 114,000. That's up from 98,000 last time they reported. They still have that 100,000 EDV order from Amazon. They have over 15,000 vehicles produced since the start of production as of September 30. 67% quarter over quarter increase in production. Very nice to see. And they're reaffirming their target of 25,000 vehicles produced for this year. And of course, they are still burning a lot of cash. But as you can see here, they still have approximately $14 billion of cash equivalents, and restricted cash as of September 30. So still a long way to go to stop the cash burn, but they still have a long way with that amount of cash. Now overall, with the increase of expenses here, that grew to $857 million as compared to $694 million the same quarter last year. But this quarter, they did recognize a non-cash stock-based compensation expense of $268 million and depreciation and amortization expense of $52 million in operating expenses. So overall, their stock-based compensation expense drove the majority of the year-over-year increase in operating expense in the third quarter. Now, yes, we've seen that with many companies, and I'm sure we're going to see this in the coming quarters as well. Now, we have some other news here as well with regards to the R2 platform. So they say here that they continue to work with the state of Georgia and the Joint Development Authority and expect their R2 platform will launch in 2026. So still a lot of time. They expect the R2 platform will unlock a global market opportunity for Rivian and are excited about the early development work that is underway. They remain confident in their ability to fund operations with cash on hand through 2025, excluding the impact of the investment in the currently contemplated joint venture with Mercedes-Benz. So, I think the market enjoyed this quarter. They enjoyed the comments that were made. Still on track. So, nothing else to add here. Of course, the stock is down a lot, still burning a lot of cash. But as they said, they have enough cash to fund it in 2025. Then again, they also have Amazon backing them. So I don't really think they're going to get into any issues anytime soon. There's this partnership with Mercedes-Benz as well. And I do think that their vehicles are quite nice. I've seen lots of reviews. I've seen lots of people that are extremely happy with their vehicle. So I'm pretty positive on Rivian. Obviously, I don't own Rivian, but if I had to, again, I repeat myself, if I had to add or choose another EV company, I would probably go with Rivian over Nio and even Lucid for that matter. But at the time, I'm just staying with Tesla. Of course, if you own any Nio or Rivian or Lucid stock, do let me know down in the comments below. Share your thoughts of these recent quarters as well. If you enjoyed this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next one. Bye bye.